The banks continue to delay and clarity is at risk in a big way. We'll break it down for you guys today. Before we get started, I want to thank our sponsor, and that, of course, is Tangem. And self-custody is going to be one of the critical milestones of doing anything in crypto. Jump over to tangem.com. You guys can get your own self-custody wallet. These are like credit cards, as you can see right there. They work fabulously with your phone. Doesn't matter if you're on Apple or Android. This is one of the best solutions out there that is engineered for absolute security. I can agree to that. You guys check out Tangem, and of course, hit the Get Tangem right there. It's going to give you a little bit of a discount, and you guys can get the 3-card set. That's what you want. Pick a cool color, and off you go into self-custody. All right, let's lead off here with a tweet. And I want to lead off with this one, and this is the ABA, the American Bankers Association. 60 more days to comment on rules tied to the Genius Act stablecoin. Now, I just want to frame this for a second. This was supposed to be resolving by May 1st. So just literally just a handful of days away would be the last comment period. They want to extend that now, and you have all of the banking organizations that essentially are tied to this that are trying to click this through. And when you look at that, guys, and understand really what's happening, the delay model that they are using now is actually a pretty good strategy if you think about it. Here's kind of a breakdown right here. 4 major banking trade groups, just asked the U.S. Treasury and the FDIC to say, okay, OFAC, pause the Genius Act comment period, and here's the way it goes. The ABA, BPI, CBA, and the ICBA are among the most sophisticated, best resourced advocacy organizations in DC. Their regulatory affairs teams have been tracking stablecoin legislations for years, and I know some of them. This is the guy that's tweeting this, Bill Hughes. They are really smart and hardworking. They do not need more time to understand these proposals. They need a delay, and that's what they've dressed it up as a procedural request to, of course, the OCC, and you can't blame them for trying. I'm getting at it. I look at this and I think this is a pretty good strategy because it will get the situation delayed, and the timing is right in line that would pretty much derail Congress from being able to get this done, because this is going to flow into the summer, and then we all know what comes after that. That, of course, is the midterms. Here, though, is the crypto industry saying, wait a minute, we are ready to go. We're ready. In fact, we're going to all jump in on this, sign a petition or a paper, and say, we're ready. Congress, get this done. And you can kind of see everybody in here from Coinbase to Ripple to OneEdge to Jump to Kraken. I mean, they're all in here, guys. Every organization out here, whether it's Blockchain Association or the Crypto Council, are all pushing for this now. And I think this is a last-ditch effort to try to get this across the line. The banks, though, are playing political ping pong with a lot of these issues, and that, I think, is going to be the biggest one that we're going to face yet. Here, though, after all of that, here, of course, is Patrick Witt. He is the executive director of the President's Council of Advisors for Digital Assets, and he retweeted this twice. So my guess is that he's fed up with the banks, and I think we are at the point of no return. And this is our prediction here on our research team, is that the White House is about to drop something major on this to offset these banks and get Congress back on track. So I want to lead off with a series of clips here around the Wells Fargo. And I think this goes for the banking industry in general and what they're really afraid of. And I think in this clip, I think they're afraid of Ripple's banking license, Robinhood, Coinbase, and the likes. Take a look.
And now they're trying to get a U.S. banking license. Does that worry you as a potential competitor to Wells Fargo and other banks like yourself?
No.
Okay, don't worry about it.
No. We think about the competitive advantages that we have, which is we have trust. We have the FDIC insurance. We have a huge customer base.
All right, so we have trust. No banks have trust right now. Every consumer out there do not trust their banks. FDIC insurance, that's government regulated. Okay, every bank has that. That's not a big advantage. And then, of course, you have a customer base that is, I think, likely to start to move around. Now, granted, I think the old banks will be in here for a very long time. The problem, though, is they are way too lazy to compete in this sector. Watch this.
And then when you go to one of those companies, you look at a company like us and say they have 70 million customers. Wow. And if they were to get some of these things right, think about how hard it's going to be for us to compete with them. So it puts a huge amount of pressure on us to have to deliver things in different ways.
Oh man, I feel so bad for these guys with them having to actually compete for customers' business. Imagine a world in that stature right now with the banks having to compete with us. And I'm talking about crypto in general, because I think he is dead on there, is that you're talking about major companies like a Coinbase, Robinhood, and many more that will have an innovative advantage. It is very clear. So it boils down to maybe stable coins. What is the use case? Well, here's Wells Fargo talking about that.
Jeremy Allaire, who started a company called Circle.
Yep.
Is that a concern of you, that they can basically do some of the things you do at a less cost?
I think stable coins are, it's not clear. So the question is, what's the use case in the US? Cross-border payments? Beyond that, it's not clear to me that there's a winning app there or winning edge. By the way, it doesn't mean that we're not going to partake in it. In case what I said is wrong.
In case what you said, this guy had no answer there. This was a terrible take on his point. This is a CEO of a major bank, top 5 bank, that should be chomping at the bit for innovation in the financial sector. You've got MoonPay right here launching their virtual accounts in New York, letting businesses turn ACH, wire, and SWIFT deposits into stablecoins and that can be sent to wallets. So this is a good example of use case, very, very easily done. And I think banks that are going to allow this, and there's already been a handful of banks that have already said they're getting into SoFi. SoFi just announced they're doing some things in crypto. I think they'll accelerate faster, but that's more of an online neobank. I understand where these big guys are coming from. I think they are done if they do not innovate going forward. So let's get into what would make you stay as a customer onto Wells Fargo. Well, it would probably be the brand, right? Because that's what most customers do. They love these brands. Listen to this one.
Your symbol is a stagecoach. Remember?
So when you think about like what's going on in the world, the speed of change, the rapid movement, we still use it. It's kind of in the background a little bit.
Who was Mr. Wells and who was Mr. Fargo? They started Wells Fargo, I presume.
They did. Henry, I always get them wrong. Henry, Fargo, and William Wells. I think I got it right.
If you just go over to their website, you can learn more about who they are. Maybe the CEO should just check what they're actually doing. But this, I think, if you look at branding, the Stagecoach was an icon of America innovation. It was doing something that was on the leading edge of communication, of travel, transport. This was the element. This is exactly where we are in crypto right now. Imagine a bank that had that kind of history. Solana Policy Institute tweets this right here. Stablecoin payments can't scale if America and Americans are still required to report a gain of fractions of a penny every time they tap their wallet. This, of course, is getting into the tax issue. The tax issue, again, goes back to our lovely people in Congress, where they're getting together and they're meeting. And they're meeting so much so that they have, what is that? What is that in the background there? What is that? I don't know. Oh, okay. It's playoff appearances. Great. So they're watching more sports than they are tax benefits. Thanks a lot. Congress doing another fantastic job. All right. So when you think about what the banks are doing, which is this massive delay tactic, the attacking, as well as going in on the OCC to try to dictate policy, slow things down, which it gets into the whole point of all of this leaning toward clarity. The last line of defense, of course, is Bessent. And Bessent is asked that question right here. Take a look.
As the Genius Act is implemented, I want to make certain that you'll ensure that the Treasury Department works with my staff on any necessary fixes as rulemaking is carried out.
Okay, so as you can see right there, the last line of defense, really for not only the OCC, but I think in general, to fight off the defense tactics that the banks are saying is Bessent. And there he was. Maybe that is at least some relevance of him saying, yeah, we're going to make sure that you guys are fully aware of what's going on. Maybe that is happening right now. And if you look at what Garlinghouse said a few weeks ago in reference to what Trump tweeted, which was a big deal at the time, I'll zoom in on that if you guys don't remember it. It was him going right at the bank saying, hey, we need to get this done. Stop screwing around. Let's get it taken care of because China is going to beat us to the punch here. And of course, Garlinghouse kind of hit it on the head. Yeah, those are poignant words and they're very striking. But the reality, guys, is we're not there yet. Here's Bernie Moreno, though, says that he expects the market structure to be end of May. This is, I mean, how many more times are we going to hear this? End of April, end of March, end of January, end of February. First it was we need it done by May. Now it's going to be end of May. It's 270 days of delay, and they're running out of time before midterms. And it's getting serious. And I think that's the face that we are dealing with right now. And it's going to be a big one for sure. So what happens to the market if clarity doesn't come in? You got to look at a few things. Here's Rand. He's talking about sell may go away. Not necessarily. In some cases, you could look at this. There has been some performance in May in the past where you had some nice up months, in June, even July. But there are some differences with this particular timing. The timing is this right here. And this is midterms. And you look at it 2018, 22, 26, all of which have been a little different in terms of performance. Now, does that hold through to this year? I don't know. Let me know in the comments down below. Do you think summer is going to be the pullback that Tom Lee and others are anticipating? Or do you think this is going to be a continued run into the market? So as you can see, guys, we are running out of time. It is down to the wire. Banks are pulling their typical cards. And of course, Congress is now caught in a catch-22. Let's see what happens. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.